In this video, guys, I want to share with you a big mistake that I made taking this time of day trade. Stick around. Hey traders, warm welcome to you. All right, so there's another video that's coming up, or it's recently gone up, where I talked about a hit and run trade. Hit and run trader it might be called, or hit and run trade. Go and check that out. Make sure you subscribe, obviously, so you get the notifications and stuff when videos come up. And by the way, guys, I know there's lots of video content out there. If you have your notification, I definitely don't recommend having it binging on your phone. I don't want to be binging on your phone, guys, but if you get an email, you can look and see the title, and it might interest you, it might not. I think that's the way to operate when there's lots of videos coming out all the time. So last trade I talked about, this hit and run trade, was trading at this 2:30. Keep saying 2:30. It's 4:30. 4:30 UK time is when the European markets close. 2:30 is when the US markets open, UK time. I'm talking UK time here. And very often we get this rotation around that point and a swing low. And that was part of the anchor for this hit and run trade that I took. And I talked all about that, so I won't repeat myself here. So going back to this, and by the way, let me clarify what we've got up here. This is a Dow ETF, so DIA 5-minute ETF. It's exactly the same chart pattern as if I was trading the YM, if I was trading CFDs, if I was trading spread bets on the Dow. The only reason I like to use the ETF is because it's a very quick and easy way on TradingView of being able to see the gaps, because it's just a regular trading hours product. Whereas if I put on the CFD, or if I put on the continuous contract futures, the YM, it's going to show me the 24-hour chart, which is fine. And obviously I will look at that when I'm trading that specific instrument. But just for these purposes, I like to visualize stuff and mark up my charts and think about things when I can see the gap in context, because that's very important. The context of gap is very, very important. Okay, so this is DIA. So it's basically the same as if we were trading SPY or Q. It's exactly the same thing, basically. And it's just an easy way to visualize things. So 5-minute chart, we've gapped up. And this is kind of, I tell you what, this is the market's sneaky at the moment, because we gap lower and we range bound, and then we gapped up above the high, and for all intents and purposes, it was a big move overnight. A big move overnight. If you look at the close on here, it was here to here. We've taken out the whole of range. We gapped up above the range. It looks super bullish. And when you see that super bullish move, you kind of, especially at the end of a big kind of move lower, I'm going to put it in context here, roughly see where we are. Big move lower, and kind of, I think we are in technically a bear market at the moment. It just looks like we could rip high, but it didn't. It kind of came lower. So I'm still thinking, okay, ideas here. I still want to be long, and I didn't short any of that. I want to get long, but I'm not just going to dive in at some point. So what do I want to do? I'm thinking, okay, we could flush through the prior day's low, just take out the loss. There's going to be so many people who are absolutely well and truly frustrated by the fact that this has gapped up and it's just done all the gains, and there's going to be a hell of a lot of stops below that gap, hell of a lot of stops in this region here. And that was my thinking, right? I thought, okay, fine, opportunity there for a little flush through, take out everybody, and then we've still got some strength there because we've gapped up overnight. A big rip up, and maybe we'll rip back up to the open, or maybe we'll rip back up to the VWAP. Or there's enough juice in that trade to not worry about anything else but looking for that exclusively. And by the time this has kind of chugged lower and you've realized, yeah, actually this is weak, you've got two decisions to make, by the way. This is a different topic. But you either go, okay, let me get short and jump on this thing, or you say, wait, where will this end and how can I line long? I chose the latter. That happens to be the wrong decision. The better decision would be to recognize that this is a big change in sentiment, get short as quickly as possible and get aggressive with that. I didn't. I took the other option. That's trading, guys. That's how it works. And ultimately, this is a losing trade. So let me go through exactly what happened here. So it looked, and you've got to remember, I could do without that. You've got to remember, guys, that when you're on the hard right edge of the chart, things look a lot different, right? They look a lot different. And so this is what I was seeing here. So we drifted low, pretty steep trend. And we just took out the prior low. There's the prior day's low. I'm going to put that in there like this. Took out the prior day's low. And for all intents and purposes, it looked okay. And look at the time. Look where my cursor is. 4:30. 4:30 yesterday. We've got a reversal at 4:30. I took a trade from that. That worked. We're seeing this a few times, and I'm seeing a lot of things lining up. I'm seeing a break below the prior day's low. I'm seeing extension, big extension. I'm seeing a reasonable range. I'm seeing 4:30 low. I want to get long. I just want to get long on this. I'll talk about the mistakes I made in a moment. So I get long, and we start to push up. I think great. Comes back, and actually it stops me out. Stops me out of the trade, and it was a reasonable trade. I thought it was going to be a good trade, so it wasn't like I was just dabbling in this. I had a structured stop in place, an obvious place for a stop below the wick, and didn't work out. And it looked so good at the time. Stalling, some wicks in, finding some support. There we go. Candles come in. Off we go to the races. We're going to, lovely, jubbly. Yeah, perfect trade. Well done, Mark. Well done. Off, you start thinking, here we go. I'll peel off some of the VWAP, and then I'll kind of see if we can get to this congestion area here. You start planning the whole thing out. And then it starts rolling over. You think, don't worry about it. It's and we came back lower, and we pinged out here. And of course, when I'm here, and it's pinged out here and it's popped back up, I'm thinking, I just mistimed the damn thing. I'm not going to take it again because I recognise we're in a bear market. I recognise there's a weakness there. Tempting as it was when you see that wick and then a green candle, like, have I just been caught out by a little bit of this? Anyway, it was the right thing to do, come out of the trade, and it ended up pushing lower and lower and lower. But the trade I can't call the trade working, but the idea did work. The idea worked. It was just a lot later in the day. I'm not going to claim that if I'd have just timed it better, I would have got on it. No, because I needed the time of day. I needed all these things line up, and the trade just didn't work. The theme and the idea worked. There was some strength there, but it was way lower than I expected. The time was wrong. Could you really class that as something that worked? If you're sitting in the pub with a pint telling someone how close you were to getting on that bull run, people would be saying it. But in reality, no. There's no way I was getting that trade. So the biggest mistake that I made, I think, when I'm reviewing this and I'm kind of going through the scenarios, is the aggression of this move. There's a lot of difference between this and and when I articulate it, that's fine. But in the heat of the moment, sometimes you misinterpret stuff, and this was a misinterpreted trade. It happens. That's why we have a stop loss. That's why we take we have losers and we have winners. That's the name of the game. But this was much more of a shallow move lower, much more mixed, right? Dirty candles, I call them. And then we got the tail at 430. I wanted to say 2 again, don't know why. 430, pop back up to the VWAP. It was a nice little trade. This is a lot different. You've got a downtrend, heavy downtrend, big move, big range, undone a lot of the upside gaps. There's a lot of people who are trapped and are hurting who have to get out. And the angle of the trend is way, way, way more aggressive than this. We've got 53 degrees if you want to do it precisely, and this one is 35 degrees. So it's a lot steeper. And so, when I start to think about, some of these things, the context is so important. And whilst the structure of that trade is okay, I think the idea is fine as well. But sometimes you've got to just say, right, the context is slightly out of sync with what I'm looking for. What's a better trade here? Am I asking too much to see an instant reversal? Am I asking too much to see it pop through that low, 430? It just looks great, but it's not even pulled back yet. It's not pulled back yet. It's driven hard right to this level. The chance of this bouncing and doing a V-shaped reversal from here are probably slim. And so this might just be a resting point before another leg. So why not wait to see how it rests, how it responds? And when I take it again, maybe I would, but I just think when you at some point you've got to look at the context and go, this probably needs an unwinding. It needs a couple of pulses. It needs a flag. It needs a counter trend move. It needs a few unwindings before it will finally reverse. And that's exactly kind of what we saw, right? We saw this flag here, which was this. And it just happened to be that level because it was a good level. Push lower, then we kind of see a counter trend move, and then we kind of see this chopping pattern, and then we're off, and then boom, it just rips. It just absolutely rips. I didn't even stagnate there at all. So the biggest lesson, I think, for me on this trade is to, bearing in mind that, and there might have been a little bit of bias actually, of that 430 reversal, and it's a good level, it's below the low, and wait patiently for it, ticking all the boxes. But I think, recognizing the strength of the move up to it and the severity of the amount of people who were caught off guard meant that there was probably one more leg. Now, it wasn't a big leg, And if you were trading that and watching for that, you know, when you start to see these are probably the type of candles that are good to get reversal on, because you've broken the downtrend, you found some higher lows, should I say, and you think, okay, it's getting a bit more green candles, right? Look at the green candles in there, hardly any, 2. You go from there to there, all of a sudden it's almost like 40%, 50%. Much better strength there. So all it needs is a slight tip now, and the supply demand will shift, and we get a lot more demand coming in. And we did, and that's what happened. The supply backed off, and it just boom, ripped up. And that was kind of what I was hoping for back here. Didn't get it. So the biggest mistake is the context. Understanding the context and just doubling down on understanding, especially in the current conditions where things can change from being super bullish in an instant, like a big gap up, big thing, big, well, 5 minutes bullish, off we go, to okay, and to no, and then trying to find the sweet spot, then realizing that the train is still moving. And very often it's going to take a little bit of time to slow, so it might want to flag first, it might want a shallow pullback first, it might want one more shove, even though that level and that time is a really great time normally to take that reversal. It might just stall things a bit and just put the brakes on, but it doesn't mean that you're not going to get some follow through and some kind of price movement under that level, and that level almost acts as a magnet for price to come back to, because that's exactly what happened. It came lower, price came back to that level there, which is the magnet, before it finally catapulted up. So it's just understanding those little nuances. Anyway, real world trading, guys. Sometimes you lose, sometimes you win. That's the way it is. Take care. Bye-bye.